Time to see what's on the radar for Colin Stewart, CEO and portfolio manager at J.C. Clark. And Colin, your eye on real estate. REITs have not been loved much lately.
No, and that's sort of exactly why we think it's an interesting opportunity. It's hard to find things in the market that are out of favor or beat up today, as we know many things have rallied and are at their highs and traded high valuation multiples. And real estate or REITs are one of the few sectors that have really underperformed. It did a little better last year, but if you look over the last 5 years, REITs have not performed well. I mean, some of that is for those logical reasons. Interest rates have moved up a lot from the COVID period where they were very low. That's obviously a headwind for REITs. We've had this work from home trend, so office real estate owners have really suffered. There's been concern for some of the industrial REITs about reshoring of U.S. manufacturing, and that might hurt some of the industrial property owners or REITs that own industrial property in Canada. But overall, we think a lot of those trends are reversing. We're obviously seeing people back to the office. There's some speculation that interest rates are going to come down more, which is a tailwind for REITs. And I think overall, if you just look back over a really long period of time, 20, 30, 40 years, real estate's been a great investment. And generally, these investments are characterized by stable cash flow. They're stable businesses. Right now, the valuation multiples are low. Many REITs use that cash flow to pay out attractive dividends. So in an uncertain market as we have today, I think it's an out of favor area. Valuations are reasonable. There are some potential tailwinds that we think are emerging. And it's a stable sort of cash flow generating investment. So we think in a more uncertain time, it's a good place for investors to be.
And it seems like it's been a bit slow, because we've been talking about back to work for a couple of years, longer probably, but it's really felt like in the last couple of years you've seen more and more people who are actually back at work. Yet it seems like they've been slow to respond to that. But what's their occupancy like? How are they doing?
Yeah, I mean, it's slowly improving, and you're exactly right, Roger. I mean, the office real estate or the office REITs have been really the worst performing area, and it's been a real struggle for them. I mean, I think a lot of there are other subsectors within the real estate. For example, we've seen a couple apartment REITs; those have been good places to invest. InterRent and Minto, both taken private or taken out recently by large institutional investors. Or Minto is still ongoing. So there are, the industrial real estate assets have done reasonably well. Retail owners of shopping malls have actually been doing well, but office, because it's been slow to come back and the occupancy rates, I mean, so there's a real bifurcation. The really AAA buildings have 95% plus occupancy, and the B and C buildings are still in the 80s. So it's, that environment's still a little tough, but, and we haven't necessarily been invested directly in office REITs, but, the one other thing happening in the Canadian real estate market is there's a real dislocation between the value for private, real estate assets and what's happening in the public market. And that's why we've seen some of this takeout activity recently with InterRent, a big apartment owner, and Minto more recently, just this year being taken private or taken out. The values or the valuations in the private market for these assets, if it's a long-term owner, a pension fund, for example, are willing to pay or value them at a much higher price, and the REITs in the public market are trading at a discount. So we're seeing some of this takeout activity, and we think that actually, could continue if that valuation gap persists.
Now, are those more opportunities then? They're going private, but does that open up some opportunities to see the value go up?
Yeah. I mean, I think the market has already reacted, but yes, exactly. For the ones that are left, I mean, we have a number of investments in real estate companies that we do think trade at a big discount to what their private market value would be. For example, if a pension fund were to come in and buy the whole business, or institutional investors, and for whatever reason in this period, because of some of the headwinds like rates, retail investors in the public markets have taken a sort of a broad negative view, and a lot of these real estate stocks have sold off, and that's one of the reasons we think they're attractive.